is Martin from Secrets, the channel for learning about trading and investing. Welcome to quick market wrap up, where we would look at the technical charts and try to understand what happened in the market, then plan for a better trade for the next day. That's tomorrow, Wednesday, April 10, 2024. Tomorrow is an expiry day because it's truncated because Thursday is a holiday, and it's an expiry for both indices, Nifty and the Banknifty. So today we had a bull trap day, a red candle. Trapping the bulls was formed in Nifty, and again a red indecisive spinning top kind of candle was formed with the Banknifty. Let's try to understand more. We'll come back to this wrap up, but first we need to look at the charts. Let's do that. So let's look at the Nifty charts first. Swing charts. This is how it looks. Market did gap up and moved and made new all-time highs, and then came back and closed below the previous candle's high. So that's trapping the bulls who were very big yesterday on Nifty moving further up. Didn't happen. That's a market trade. So it's a trap. It's basically profit booking that's happening. And Banknifty's candle, if you see, it also gapped up initially and made new all-time highs, very close, very 50 points away from 49 big rounding number, and then retraced slightly and then formed an indecisive because it's small body. It looks like a spinning top. Spinning top can be dangerous at the top of a rally, but only it's confirmed if price moves below today's candle's low. So that's how it looks like. Right, market at all-time highs, but today was kind of a trap day with some profit booking at the top. Otherwise, if you look at price, has been steadily moving up towards the top of the trendline channel. Two of them actually, the inside trendline channel, it has reached almost near the top, but still there is scope to further move up towards the 23,000 and beyond. But probably because some retracement may be required, from consolidation may be required here in order for that to further break out from the small one towards the top to 23,000. Market doesn't move as we wish. Market moves needs one way, probably one gap up, take out 23,000, or it could be, it could take 1 or 2 weeks, or it could take few days, or tomorrow itself. All decided by the markets, but overall market is bullish. It's plus momentum in the trend and price action also, and support resistance levels, if you look, the first resistance will be at very close to the 22,800 levels. That's where the market went. It tended to move on 22,767 to be precise, so 22,767 and 2800 rounding number would be resistances, and then 22,900, 950 and 23,000 could be big resistance out there. Downside, the supports could come in at major one at 22,500 because it's kind of a breakout zone, right? Could find some support if it is dipping, and then 23,201 is a 20 exponential moving average support there, and then for the down 20,000 has got 50 exponential moving average at the same time as it's a big rounding number also. Good supports can come in there. Similarly, Banknifty, if you see, it's also within a trendline channel, and inside one, yellow one, it has reached the top of chart. That's why you have resistance there, and it was to break out. It may take days or weeks or single day, but you just need enough energy to break out of this inside trendline channel and then move further to this top. So it has scope of moving up till 50,000 at least as per the trendline channels. But today it has hit the inside trendline channel top, and then so the first resistance will be at 49,000 nearby, 50 points away. You have the all-time highs. So that zone has to be conquered first. That will be first resistance. Then comes 49,500, and then obviously the big rounding number 50,000. Major resistance on the upside side. Downside, market could find support at 49,300 zone from where this current breakout in the last 3 days has happened. The 3 all-time highs we made, and if very close by have 48,000 also supports, which is a rounding number again. And after that, 47,500 will be the 20 expression moving average, which has a gap also that's very close by at 700, 47,700. And retracement Fibonacci is at 47,350. So that's support. Then 47,500 47,000 also is support after that. And upside 48,000, so it's like 48,200, 48,300 for support, 48,000 the second support, and then 47,500, and then 47,000 rounding number, and 46,976. That's going to fit. So major supports are at 47,000, 48,000. No, nearby zones, right? That's the Banknifty we're talking about. Let's get back and see the slides. So we had new all-time highs, but we had a flattish close at 0.10, which is just 23 points up in a rally of nearly 35% plus. It's close still above the 20 exponential moving average, but a red down day with a bull trap. Wide range red candle is formed today. Profit booking. Banknifty also hit new record highs, but closed positive with 149 points, but the candle is red. A small body candle, it looks like a spinning top. So price is about 2600 and 48,730 in the case of Banknifty. So intraday the price action was interesting. It was a gap up, sell off, profit booking, and then inward. Then it was recovered. Market moved further up, made inverted V-shaped moves. In between it hit all-time highs also, finally closing more or less flat, is less than 0.5% move up in the case of Banknifty, and flattish 0.1 flat, absolute flash is close with negative gains in the Nifty. So levels you already seen, and I'm not repeating that. So if you just try to segregate the items, the parameters in favor of the bulls and the bears, this is how it looks like. So being very close to record highs goes to the credit of the bulls, and it's closing about substantially at a very high level, very close to 849,000 in the case of Banknifty, and very close to 20,700. It has not given up much of the price gains, and the momentum and the trend also looks to be intact. The demand size is about 60, absolutely bullish. Higher low pattern is maintained. 20 exponential moving average support is down below this support. With the extra indicator showing bullish in the Demat positive zones, but the bands are expanding on the upside with bullish bias indicating more potential moves. Major index sectors are all still green, except for 3 of them, which are half out of the 6 major index sectors. If you see, auto, pharma, and FMCG is slightly negative, but overall if you see either bullish or sideways, of them are only one of them, the IT sector, which is the bear zone still in the short term daily charts. Heavy beat stocks, if you see, most of them are green except today. Reliance, TCS, Kodak, Bankers managed to close red only. But otherwise, if you see the momentum, it's bullish and sideways in the short term, except for the Infy, which is struggling in the negative bear zones. Open interest tomorrow is an expiry day for both the indices. Open interest levels for the Nifty seems to be 22,500 and 23,000 narrow, very 500 points range. Put call is built. Put call ratio, the options high is bullish, greater than 1 for both indices. The levels are 48,000, 50,000. That's also 2,000 points. Not such a wide range. It's a targeted week. Most of the decay might have happened. Anything would happen. Bullish PCI for the Banknifty also. The long futures also. Futures high build up also has happened on the Banknifty. Banknifty looks absolutely heading towards the 49,000 and beyond. India VIX is cooled off today. The market has closed red, so that's kind of probably indicating that today's red move may not be real and it may show up green tomorrow, probably. Otherwise, VIX is cooled off. It had been cooling off since long. It is now at 11.3 in the long 120. So what factors are in favor of the bears is that it is a bull trap day. Profit booking is coming, or probably it could be beginning of a retracement. Any possibilities are there. We have a short build up that has happened on the Nifty index futures high. And it is good to see small body. Well, Nifty also has got a trap, long wide range bearish candle. All these are giving some concerns in daily charts, but we can probably unless it is confirmed to be continuation of that the next day. But for now, it goes in favor of the bears. This index is also red hot. It has had a gap down, consolidating after that fall last week. A small dip has happened, so it could extend to a more potential retracement. So that we stay watching out for those other market indices. Dollar is also showing red as of now, but it's very close to the 104, and rupees remains to be very weak, about the 83, although it's red today. Crude oil is at the top, although it's red today. It has been spiking up and trying to break out of the top of the trend line channel zones, and it's at 86 plus. Not a great for an oil importing company, although it benefits the marketing companies of oil. The factor that goes in favor of the bears maybe that the gold is at all-time record highs today. Also, it's at all-time records. So this gives doubt where price may eventually move to the hedging instrument gold, where money gets shifted to safer haven when markets may dip. That's a factor that could go in favor of the bears if that works out. Now, Fyers was sellers today also. Yesterday also there were sellers. So Fyers not coming in as some big time supporters. Probably they're waiting for the Fed rate cuts to happen. So yeah, need sellers for long. That's the reason market depends on the retail or domestic institutions alone. That's what the data shows, the cash market at least. So market is showing some resistance after hitting new all-time highs. Right, every time it hits the last 3 days, you can see that it's getting some pullback or resistance. So it has not had a solid green candle till now about that resistance zones of all-time highs. So until that comes up, we're going to hope for a big breakout to happen. Right? It's profit booking, and no solid big breakouts will come only before money comes in. So it's a bull trap and issue day, which is not a great thing. So some consolidation is what it may indicate before the next move, although the direction is up there. The moment of the trend indicators and several factors. And the possibility of a breakout from here is possible, right? But it's very close to a big rounding number, 20,000. Either it may get taken out in a gap in one of these days coming, or it could be struggling with facing resistance in that zone, because that's how it behaves before big rounding numbers. Bullishness is not standing out with respect to the momentum trend and the price action as of now. So if direction movement is that can be expected as per the technical charts. The green close around that resistance zone on both indices is what is required in order to have a trending breakout moves from here, big breakout moves. Until then, have tight stop losses. Maybe difficult to trade close to big rounding numbers as said before. Investors has to just look out for short term, for long term as I will quantity stock investments at this point. That traders can look for a direction. Should buyers can hope for that big thing. Wait patiently for that to work out. Until then, non-directional trades within a working range or with some caution on the upside is what we'll have to play. Yep, top of the channel, the technical chart shows there is a lot of space to go from to 23,000 and beyond. Well, as per the trend line channels, and 50,000 also is possible easily in Banknifty also. So the chance is saying, but right now it's a profitable zone. That's it, right? So its potential versus tight stop loss has to be maintained. So risk management is all thing that we have in our hand. That's all I have. Play it safe, and market is bullish, market view is bullish, but we have to have tight stop losses because at the very top, trying to take out the big rounding number. That's all I have for the next day. Happy trading, happy learning, happy investing. Bye bye.